Greetings traders and welcome back. Thank you for joining me as always. Chris here bringing you another survival guide. Today's discussion will be about the Eurodollar futures. And I am not talking about the Forex pair, the Eurodollar. Instead, this is something quite a lot different. We're going to talk about where the Eurodollar came from, as well as some of the trading strategies that traders are incorporating the Eurodollar into their portfolio and how they're doing it, as well as some of the pros and cons to trading the Eurodollar futures market. But before we dive any deeper, let's show you how you can apply the Eurodollar futures to your chart as well using the Finamark platform. That way you can take a look or maybe apply some TA as we are talking about these Eurodollar futures. In order to do that, all we're going to do is go over to the ticker symbol on the top left. We're going to give that a click, give ourselves a /GE. And after that, we have the Eurodollar, and then we have all of the different contract months. I'll click August for this example, and I currently have it set to a 4-hour chart, and we do have ourselves all ready to go. Now, without further ado, let's get going. Because of the immense popularity of the Forex markets, when you hear Eurodollar, it's completely understandable if your head is first brought to the Eurodollar exchange rate marketplace. That is, in fact, where most people's head will go. But here, we are futures traders, and even if we're Forex futures traders, what we're focusing on is the Eurodollar future, which is not at all the exchange rate of the euro against the dollar. Eurodollar futures contracts are time deposits that are stored in banks outside the United States. So we can think about it as money from the US that is being stored outside of the US, because at the end of the day, it is still denominated in US dollars. So once again, Eurodollar futures contracts are time deposits that are stored in banks outside of the US that are denominated in US dollars. This means that they are outside of the Fed's jurisdiction, which means they do bear higher risk, thus they have a higher yield potential. Now, why do we call it the Eurodollar? Well, when they were first launched, the dollar-denominated time deposits were held mainly in European banks. Due to this, they became known as Eurobank dollars. And initially, at least over the years, these instruments started spreading within banks worldwide. And today, that name, the Eurodollar, still sticks around. Although not the most popular instrument that is traded, Eurodollar futures are a very popular instrument nonetheless, and are useful in investment mechanisms for both advanced and beginner traders for various reasons. The history of the Eurodollar is quite interesting, and it dates back to the post-World War II era. This is because the US came out as one of the global superpowers, and being such a powerful country at the time, there was such a high demand for the US dollar. Other factors that went into why people were demanding US dollars had to do with the economic aid that the US was applying in Europe underneath the Marshall Plan, as well as just the booming US economy in general. The concept of the Eurodollar started evolving during the 1950s and the Cold War period. The Soviet Union began a process of moving its dollar-denominated revenue from oil sales to banks outside the US. The idea was to prevent the country from freezing its assets as part of an aggressive geopolitical strategy. Over the years, the Eurodollar has competed with the certificates of deposits, which most people reference as CDs, for top place in the primary short-term money market. And in the late 1980s, after a series of events, including the Fed's limit on domestic deposits, the commercial deficits in the US, and more, Eurodollars overtook CDs. And since then, the Eurodollar has been the biggest and most popular private short-term money market worldwide. And today, the Eurodollar interest rates are used by investors as a corporate funding benchmark. They also use it as an indicator of credit risk levels on an interbank scale. And it was in 1981 that the CME launched the first cash-settled Eurodollar futures contracts. The Eurodollar market isn't without potential problems, and the main problem that traders associate with the Eurodollar market is the fact that it lacks detailed statistics and official data regarding its growth. The reason for that is simple. It's because it isn't run by any one government agency. However, from the available data, it does become clear that it is the biggest financial market worldwide, with statistics pointing somewhere around in 1997 that over 90% of all loans were made this way through the process of the Eurodollar. If we dive a little deeper into the numbers, we could point out that in 1969, the size of the Eurodollar market was estimated at around 37 billion. But in 1985, the market's net size was 1.67 trillion. 1.67, we missed the point, but $1.67 trillion. That's a large increase from 1969 at 37 billion. And then in 2016, it was said to be almost around $14 trillion. So the growth potential here is very, very real. Also in the Nedbank, the rise and fall of the Eurodollar system study, the September 26 study concluded that the Eurodollar market is substantial. They decided that it peaked at approximately 0.87 times the size of the total U.S. banking system. The Eurodollar futures market interests all types of investors worldwide, from big corporations to governments from all around the world. After the CME, the popular markets for trading Eurodollars are London and Singapore individually. The former is notably more popular because it operates during both American and Asian trading sessions, so that does make the Singapore get a slight edge over the London trade. The textbook definition of Eurodollar futures states that they are instruments that are cash-settled contracts, the price of which is based on the 3-month LIBOR at expiration date. And LIBOR, if you're unfamiliar, does stand for the London Interbank Offered Rate. So in other words, the contract's price reflects the LIBOR's anticipated value at the time of settlement. However, Eurodollar futures can really be summed up as being aware that the ticker symbol is GE because that's how as traders we're going to find it, and it is the most traded interest rate-based product in the world. Once again, it is the most traded interest rate-based product in the entire world, and they are contracts on a 3-month 1 million Eurodollar deposit. More than 80% of the Eurodollar futures trading itself takes place on the CME Globex here in the United States, where market participants are trying to take advantage of real-time pricing and transparency. And although Eurodollar futures are a preferred choice for all types of market participants, including individuals, governments, and institutions like we already mentioned, they are of particular interest to companies and banks. And the reason is because Eurodollar futures allow them to lock in the interest rate on funds they plan to borrow in the near future at today's levels. Let's take a moment to talk about how the Eurodollar futures contracts work. It seems confusing to some at first, but it works in a relatively straightforward way. The underlying asset is a Eurodollar time deposit with a principal value of 1 million US dollars. Its maturity is fixed at 3 months. Once the contract expires, the seller can transfer the cash position rather than delivering the underlying asset. Eurodollar futures contracts are traded through a price index. The value of the index is calculated by subtracting the interest rate of the futures contract from 100. This is it in a nutshell. Once again, the value is calculated by subtracting the interest rate of the futures contract from 100. So an example of this would be if the interest rate is set at, say, 3%, the index price is equal to $97 because 100 minus 3 equals 97. The Eurodollar futures contract's price has an inverse relationship with interest rates. When they go down, the contract's price rises and vice versa. So to summarize how the Eurodollar futures work, we could say that they represent the 3-month LIBOR for a deposit with a value of $1 million held in international banks that is anticipated on the contract's settlement date. The complete contract specifications for the Eurodollar futures contracts can be found on the CME Group's website, or if you don't want to navigate through that maze of information, we will have it provided for you over on our blog post, so please make sure you check it out. But as far as the most important aspects of the contract, the price quotation we already discussed is going to be the contract of IMM index equals 100 minus R, where R equals the interest rate. The ticker is going to be the GE. That's how we opened up the Eurodollar futures on the very beginning portion of our video here today. And the trading hours will be Sunday through Friday, 5 p.m. to 4 p.m. Central Time, so nothing out of the ordinary there. And as far as the minimum price fluctuation, it is going to be slightly confusing at first. The nearest expiring contract month, 1/4 of the interest rate basis point, is going to be 0.0025 price points, which is going to be $6.25 per contract. But all other months will be half of an interest rate basis point, which means 0.005 price points equals $12.50 per contract. Some of the most common trading strategies revolving specifically around the Eurodollar futures can be summed up as hedging, speculating, and portfolio diversification. On the hedging aspect, financial institutions use the Eurodollar future for hedging with fixed income derivatives. That way, the banks can hedge against changes in the yield curve for the near future that could otherwise negatively affect their returns. Also, on the other hand, companies use Eurodollar futures to secure interest rates for funds they plan to borrow or lend in the future. Then we have speculating. Speculating is going to be the same style of trading that most of us watching this video today are currently employing. That means we are using technical analysis or potential fundamental analysis to get an idea of where we expect the value to go in the future, and as such, we're looking to make trades based on our forecasts and our expectations as well as our research done. The Eurodollar can be traded just the same as, say, the E-mini S&P 500 in that regard. And then the third option is portfolio diversification. Eurodollar futures contracts are preferred by institutional investors and fund managers as part of a diversification strategy. The instrument is a great way to spread risk across more asset classes and balance the portfolio with something different than typical tools like precious metals and bonds, for example. The benefits of the Eurodollar futures as a tool for portfolio diversification are based on the fact that it is a relatively low correlation against common asset classes. There are some very clear potential advantages to trading Eurodollar futures, and the first one is the fact that it is a very liquid instrument. Over the years, the Eurodollar futures contract has established itself as one of the top contracts on the CME, regularly surpassing the E-mini S&P 500 or even crude oil futures, and this is very attracting to all traders indeed. Then we have the fact that it is, in fact, time-tested. The CME launched the Eurodollar futures contracts first in 1981. The instrument became the first cash-settled futures contract. It basically paved the way for other similar futures contracts to follow, but also earned the trust of investors, having such a rich history and steady performance. And finally, we have the versatility. To complement the concept of the Eurodollar futures even further, the CME developed additional variants of the contract, including bundles, packs, and serial Eurodollars. The Eurodollar bundles allow traders to buy and sell a series of futures in equal proportions starting from the front quarterly contract. The Eurodollar packs allow the simultaneous trading of equally weighted series of 4 futures contracts quoted on an average net change basis from the prior day's close price. And then the serial Eurodollars are very similar to the quarterly contract futures, except they expire in different months. The potential drawbacks that one might attribute to the Eurodollar futures trading scene would start with the susceptibility to political risk. Political factors like trade wars and imposed tariffs, which are quite common nowadays, can hurt international trade and affect businesses' imports and exports. Since they often rely on Eurodollar futures to lock interest rates in advance, the decreased economic activity can lead to a drop in the demand for such instruments, thus lowering their price. Then we have the increased volatility around authorities' meetings. Although the Eurodollar futures contracts don't fall under a particular jurisdiction as an interest rate product, they are still dependent on the policy of the Federal Reserve. That is the main reason why around the dates of crucial FOMC meetings, we can see large jumps in the Fed's monetary policy causing Eurodollar futures jumps. And finally, they can be a bit complicated for beginners. When trading, the basic rule of thumb is to be familiar with as much as you can about the asset that you're trading. As a financial futures contract, the Eurodollar requires the trader to take into account normal and inverted yield curves, the concept of linearity, convexivity adjustments, and biases, and more. This makes it appear way more complicated for beginners than commodity futures is an example. So to sum it all up, despite being complex for beginners to jump into, it isn't as complex as it might seem on the surface, and it is a very liquid marketplace. In terms of liquidity, it regularly surpasses the E-mini S&P 500 as well as crude oil. That is definitely a statement being made there. It is also time-tested. It has been around for quite some time, and its trajectory in terms of its growth it's quite impressive. There's not much else to say about it. So in the future, I hope you consider the idea of the Eurodollar futures marketplace as a potential diversification tool or perhaps a new home for you to trade in. But until next time, I wish you all the best of luck on your Gauntlet Mini experience, but please do me a favor, and before you go, click that like and subscribe button down below. I really appreciate it, guys. Thank you very much. I'll see you all very soon. Cheers, folks.